Ultratech that is in focus today as Aditya Birla Group has decided to enter into the wires and cables business. So what does this really mean for Ultratech and the entire space, entire industry as a whole? Let's go ahead and revisit the take coming in from the editor-in-chief of the channel as well as ET Now Swadesh.
First, let's understand the why for the Aditya Birla Group. Well, Aditya Birla Group has already started diversifying from cement to paint, now real estate, and wire in a sense would be a natural extension for them. And we've seen that the Birla Group in a sense, they've really expanded into what could be called as high consumer stroke categories where companies in a sense have a dominant market share. So they entered into paint. Why? Because paint segment in India was a segment which was dominated by 3 or 4 large players. They have entered into the jewelry market. Why? Because the organized players in India, well, there are 2 or 3 large dominant players. Similarly, in the wire category, there is 70% market share which is dominated by a few players. So the entry looks logical. What it means for Ultratech, Ultratech was always valued on a pure play cement company. So you could ask yourself is that if a pure play cement company moves into wire also, how will the P multiple adjust? And why this entire expansion was not done by Grasim, which in a sense is the holding company of Ultratech, and that moved into the paint business. I don't have an answer. But for Ultratech, now time when markets will say that what is the right P multiple, because it's no longer a pure cement company. It's not a large capex, but that's how markets would see. But what it means for the paint wire companies, and that is the interesting bit here. It's not a very large segment per se, but the listed players there right now, I'm assuming that Birla Group would move into not high power cables. They would move into what could be called as the household cables used to build houses and malls. You have players like Havells, Polycab, to some extent Phenolix Industries. The P multiples here are very high. Havells 55 times, Polycab 32 times. The entry of Birla Group into the paint segment unleashed a lot of price competitiveness, and the leader Asian Paint, it really went into some kind of an tizzy. Could this lead to a derating of the sector per se, especially some of these wire companies which are B2B companies, B2C and B2B, and are commanding high P multiples because wire as a category is growing at 18-19%, which is phenomenally higher. I think this would be the first part. For Ultratech, it's small. Markets will say will settle down. For Birla Group, it is logical. But what happens to the good old wire companies? Because fat margins, big competition, and high P multiples.
The market is very big. Secondly, like they will take minimum 3 years to start the factory, and then another 5 to 8 years to get the brand established and the approvals. Thirdly, to understand the marketing dynamics, it also takes a long time. This market is not like cement or paint, but wire and cable is a very fragmenting segment. You have to deal with thousands of customers, thousands of dealers, which will not be a easy task for a newcomer. I don't think that these fears are founded at all. I mean, correct at all. Our preparation is clear that first, our company is debt free. So it is the cost competitiveness which plays. We are competitive in our operations. We are very, very competitive in our raw material procurements, and our cost control is exemplary, and also our financial cost is zero. So even if Ultratech has a lot of cash, but we also do not borrow. So I don't see any reason to get feared, and nobody can take our market share or even our growth.
All right, so that's the view coming in from KEI Industries. The stock actually started lower, now is drifted even lower with the rest of the peers as well, because you have Polycab, you have Havells, you have Phenolix Cables, all under pressure in trade today. And not just that, the company that has actually announced their foray into the cables and wires business, that's Ultratech, that is actually plunged to an 8-month low on an intraday basis. Ultratech Cements, if you look at it intraday basis, there you go, 5% down to coming in for that one. So let's try and understand and put things into perspective. We have Sharmila Joshi, who is joining us in the show right now. And Sharmila, no doubt, it's looks like, it is going to be the Birla Group is going to take the sort of crown away for being the disruptors in a lot of traditional industries. First it was paints, then they entered the jewelry segment. Now they want to enter the cables and wire segment. No doubt the analysts are not too enthused, given the fact that Ultratech has always been known as a pure play cement company. And them actually announcing this sort of a foray has not gone down with the analysts, right?
Yes, absolutely. And I think that while it's a good move long term, given the fact that as a group, they produce both copper as well as aluminum, which are required for wires and cables. And in that sense, it's a good fit. Why this bit of business has been placed on Ultratech is, I guess, what market is not liking. Of course, I think this is, all the businesses that we mentioned that they've gotten into, all of them have a very big market size going ahead. So in that sense, I think they're all good moves. But how well it will work for them, getting sort of into all these areas where they were not present earlier, and how they can actually get a significant market share for themselves is a question that remains to be answered. And I think that is the reason why all these stocks are really correcting, because market doesn't like uncertainty. So you have a business that's doing well, which is your cement business, and then you add another sort of unrelated business to it, and then you will have all the pain of setting up the business, the money, etc., outflow. Even if 2-3 years down the line, this may prove to be a great move. As on date, we don't know which way the pendulum will swing. So I think market is very wise in its in the way it sort of understands situations as a whole, and which is why we are seeing the correction. But honestly, if you ask me, if things work out the way they are envisaging, as well as the market size, this seems to be a good sort of sector to take an entry.
Fact that they're already into supplying materials when you talk about the entire real estate market as well, and this one also would just be another addition to what they're doing, like an ancillary sort of play that you could take Ultratech for. But what about these incumbents? What about these players that are already there in the market right now? Even they're getting smoked, be it Polycab, be it Havells, be it Finolex, be it for the matter of KEI Industries, given the fact that they do cater to different various segments of the wires and cables business. It could be industrial or it could be consumer centric. But what's your take? You had KEI who told us very categorically that nobody can take our market share or our growth. But yes, it's a cause of worry. So how should one play this entire theme right now, given the fact that they've fallen? It's the right time to enter into some of these companies which already have a sizable market share?
Well, see, first of all, I think market is sort of drawing a straight parallel between this as well as paints. I think you need to understand that paints is a completely different sector. And the kind of valuations that we were giving paint companies, especially a company like Asian Paints, which was getting premium valuations for the longest time. So, some amount of P contraction, given the fact that not just one, but I think, 2 or 3 new players entered the market around the same time. You had JSW, you had Birla, etc. Then, if you see a sort of a PE correction, that is something that markets and sectors do over a period of time. You've seen it play out in IT at one point in time. You saw it play out in paint industry. And now you're seeing a bit of it playing out in the wires and cable space as well. But in this particular case, I would say that a lot of the correction that we are seeing as on today also has a lot to do with the fact that overall we are in a sort of a situation where markets are correcting and mid caps are correcting more than large caps, and a lot of these names are very good quality mid cap names, I would say. So I think yes, it will take time for a new entrant to establish itself, but again, as you pointed out, they have it is sort of an extension of the work that they're already doing with a lot of real estate players, with a lot of people they're supplying cement to, etc. So time will tell how they, if they can capture meaningful market share, and who suffers in the meantime, or is it a market that they have sense is expanding and there is enough space for all to continue to grow the way they are. My guess is it will be a bit of both, because I don't think that you ever have a situation where everybody will grow. There will be somebody who is not managing things efficiently, who will feel the pressure. I don't think it will be KEI Industries. I think that's a company that I continue to like, but there could be accidents along the way. So once again, as I said, that when the entire sector, as well as the actual stock which is announced that it's getting into, everything corrects. Market is actually factoring in all these uncertainties, and I think we should be just wise to follow that. But as I said, I think that over a period of time, we will see in their numbers, and KEI Industries, to my mind, over the next couple of years, still continues to look to be a very strong stock.
Looks like KEI Industries is wired for competition. That's the take coming in from Sharmila as well. And that's a lowdown coming in as far as the cables and wires industry is concerned. See you on the
If you like this video, then like, share and subscribe to ET Now.